Got a headline for you. Ooh, stocks are headed for a fall. It is an opinion piece. It was in the Wall Street Journal. Martin Feldstein, chief economic advisor under President Reagan, he wrote that article. Didn't write the headline, but he wrote the article. Welcome.
Happy to be here.
You got to explain this. Why are we headed for a fall?
We've had 10 years, almost 10 years of near zero interest rates. And so everybody reaching for yield has bid up stock prices, bid up bond prices, bid up real estate prices to levels which are way out of line with the past. You look at the S&P price-earnings ratio, it's 70% higher than the historic average. We've only seen that kind of price-earnings ratio 3 times in the last 100 years. So it's a bit overpriced, So at some point, when interest rates rise, and they're beginning to rise, when interest rates rise, people will be able to move out of stocks and into bonds, and that'll push down stock prices.
Couldn't you make the argument that profits have gone up rapidly and dramatically and are likely to go up some more because of the much lower corporate profits tax? Can you make that argument?
Absolutely, absolutely. And if you, instead of looking at the regular price-earnings ratio, which looks back, you said, well, profits are going to be up by so much this year, you still end up with a price-earnings ratio which is way out of line with historic experience.
So it's too far, too fast. That's it. That's it.
Yes.
Okay. When do we get the pullback?
I don't know.
Oh, you've got to answer.
I don't know the answer to that. What I know is that we've got a very fragile situation, and interest rates are rising, and that combination is going to spell, at some point, a downturn in the equity markets.
You've still got the yield, talking about interest rates, you've still got the yield at what, 2.6%?
That's right, for 10-year treasuries.
Historically, that is still very, very low
Absolutely.
over the last generation.
That's right. No,
Okay.
and so, but it's going to keep moving up. It's going to keep moving up because of the deficit. It's going to keep
I've got to say,
up.
I would have thought it had moved up a whole lot more. If you've got such a strong economy,
Right.
I would have thought that interest rates have risen a lot more than they have.
Right, I agree with that.
So maybe we've got a new historical situation.
I don't think so. I think we're going to see those rates rising, and at some point people are going to say, the game is over. We can't just buy equities. We can have a more balanced portfolio, or we can shift into bonds, which will be safer.
Okay, let's suppose I agree with you. And I do, actually, because what goes up like this does eventually come down.
It's amazing how many people in the markets who are usually on the sell side of the market, or money managers, say to me, I read your piece, and unfortunately I agree with you.
Yeah, unfortunately, I agree with you. Okay, let's suppose the market does come down. I don't know whether it comes down 10%, 20%. That's irrelevant, really. But when it does come down, do you buy the dip?
You know, it would have to come down 30 or 40% to get back to just the historic average.
So are you predicting that?
No, I'm not putting a number on it, but I'm just telling you how out of line with history it is. So if it comes down 10%, it's still way out of line with the historic norms.
See, all of our viewers, they're saying, wait a minute, we know this guy. He's a very famous guy. And he's refusing to say when we come down. He refuses to say how far down we're going to go. And he refuses to say whether we should buy the dip.
Well, what I'm saying is holding it now at these prices is a very risky thing.
Okay. I own some Microsoft. We always tell our viewers, no conflict of interest here. I own a chunk of Microsoft. Not that much, but I own some. That's the basis of my retirement money, okay?
That one stock.
I'm heavily loaded into it.
A little concentrated, eh?
Yeah. Should I sell half of it and let the rest ride and take my money and sleep well at night? Should I do that?
If you are having trouble sleeping, that would be a good thing to do.
I never have trouble sleeping.
No, but I would say that wouldn't be a bad thing to. But you know, you may miss out on some further increases in the next few weeks.
Now he tells me.
But you will not be there when it corrects in a big way.
Okay. We'll listen to you, Martin Feldstein. We did listen to you, okay? But I'm not going to sell half my Microsoft stock. And I sleep very well at night. Martin,
Very good. Good
thank
being
you so
with you.
much, sir. We do appreciate it.
Good.